Good morning, good evening, good afternoon. I do not know where you are in the world. However, we are going to talk about the world and what is happening here. We're going to do this daily, just a little quick update, 5 minutes a day. Just try to start the morning out, doing a little update of the markets, what is going on, what's happening. Because at the end of the day, your freedom, your resilience, your independence truly does have a large part to do with the markets and the economy and what's going on. I'm not a trader. I'm not here to do trading advice. It's not financial advice. It's freedom advice. I'm an investor. I'm a long-term investor. I'm a risk manager. I'm a risk manager of my own portfolio, our family office, and I do truly believe that every single person should be like that. So what I want to do here and what we're going to be doing going forward, some of the books we're writing are going to be about frameworks and how to look at things. And really a lot of it emanates from my children and what I want them to learn, how I want them to learn, but what I want them to look at and watch when they're trying to decipher whether it's financial things or whether it's learning about how to learn or where to go to school and if you need to go to school, and kind of reading the tea leaves, reading society, reading politics, reading the investing landscape, whatever it might be. So we have to get a framework, and that's what we're going to do here today, but also going forward. I just want to give you, what do we look at every single day? And it's a framework because some people will come on just fine and it works for some people and they just come in and give their expertise off the top of their head. However, I do again believe if more people can have the framework and understand where people are coming from and how they're doing what they're doing, more and more people can do this. We can democratize the process. I know it's kind of an overused word. However, we can democratize the process and more people can do their homework because this is not that hard at the end of the day. Economists, school, even investors, macro people, it doesn't really matter. There's a lot of people that make it out to be harder than it is, and it's purposely made to be hard from the unproductive class, people at the top. They don't want you to know what to do. However, the average person just kind of runs with that, and a lot of people aren't out there teaching frameworks per se. There's some out there, obviously, but the vast majority of people, they go learn for 5, 10, 15, 20 years, and then they just go talk their knowledge. And I liken it to me playing hockey and understanding how to skate. I know how to shoot and hit each corner of the net. If you give me a puck, I can hit any corner. But that's because I took hundreds, thousands, millions of shots in my driveway practicing. I built the frameworks and I worked those frameworks for 20 years. And that made me the player I am and made me the skater I am. But it's very hard to just plop someone on the ice with skates on and say, hey, they hit that corner. Just like it is when you're thinking about money. I do truly believe most people don't think about money or don't care about money because it seems so, it's like you're putting them on skates. They've never done it before. And it's like, hey, here's a puck and a stick. Now go make some money by hitting the top left corner with the puck. You're not going to be able to do it. That the 99.9% of people are never going to be able to do that. And that's why they just put their head in the sand and they're just, you know what, I'll give my money to this guy over here and he'll take care of it. And hopefully there's some at the end of the day. And, they're just raked over with fees and on and on and on. So jumping into this, I always go in and check in just some of the main sites. And I kind of choose different ones every day, but CNBC's a good one just to kind of see financial headlines, things like that, the Dow falling and just see, okay, are there things I need to know, truly need to know, because a lot of this, 99% of the stuff, again, is not going to be, it's not going to tell you what you need to know. This is all reactionary stuff, things that are happening. And, Biden defending a student loan plan, New York Attorney General accusing, crypto customers or whatever, crypto exchanges, which, probably should be. All these crypto exchanges are scams. Not all these crypto exchanges are scams, but all the other cryptos and altcoins out there are really worthless. They're just copies of Bitcoin and trying to be something else or trying to be a copy of Bitcoin, and they're going to be worthless. Anything that's left eventually will all come into the Bitcoin ecosystem eventually anyway, because Bitcoin's impenetrable like that. It just eats everything else and everyone else. That's why it's called Apex monetary asset. So I come in here just to see what's going on. Just, again, quick look in the markets to see what's going on. Nothing much is happening. But this is the tail. What wags the tail at the end of the day. So I come in here just to see, and then I'll come in here to a CNN or a Fox News or whatever it is. And like I said, it could be Al Jazeera, it could be the UK Guardian. I want to get a lay of the land and see what's going on and come to the world, talk about the Pope and what's going on there. And really one of the only things that stood out to me here was China underrepresenting the impact of COVID outbreak, says the World Health Organization, which that's a departure from what they've said over the last number of years. So those are things to look out for, but these are things we've been talking about for 2 or 3 years now, knowing that was happening, because that's what's happening. And the Russians did this with the space program. They didn't talk about the mishaps they had. and didn't expose those because they didn't want to look bad. So it actually cost other people their lives because we couldn't learn from those lessons. So this story keeps playing out. We can see the collectivist versus individualist societies playing out and how the two societies act. So it's your choice as to what kind of society you'd like to live in. I know which side of society I like to live in. I like to be free and independent, and that's what we do here. We question everything. So again, just want to come here and see, okay, nothing too crazy going on. So you can kind of skip through the news, and, okay, great. You can dig into some articles, and there's tons of people doing stuff like that. And George Gammon will be out there breaking down, small news articles and the yield curve and things like that. But again, to me, I'm going to show you this, not now, the yield curve, and just explain it, but just, what this means. We have an fully inverted yield curve, meaning there's always generally been 6 to 18 months after that a recession or some type of depression. So you can actually play with this and see the effects of that. And all it is in the day, the yield curve is the bond market just signaling, hey, we think there's going to be lower rates in the future. The rates are higher on the short end, the 1, 2, 5, 10-year bonds, as they are on the long end. And we know long term, it should cost more to borrow money longer term, but for whatever reason, right? The reasons we've talked about for a long time, they're not, right? It's inverted, so things are out of whack. So anyway, we'll talk about this going forward too. But the thing again, I really want to talk about is Trading Economics is a great site. This gives you a calendar of events. So if you want to get into this even deeper and talk about this stuff even more, it gives you a calendar of exactly what's going on. This is, I think, is a really cool tool if you go to Trading Economics and just see the calendar of events that are coming out. The producer price indexes. You have the ISM manufacturing index. You've got when inflation numbers are coming out. You have all these different items that come out that can kind of help you tell the future. So people always want to know what to do with their money. Well, you have to know the frameworks. You have to understand what's happening in the world, obviously, in order to figure out where life is going. So the yield curve is one of those things. Where's the yield curve at? Okay, it's signaling a recession in the future here. So anyway, this gives you a breakdown of each day, the reports that are coming out, when they're coming out, and trying to get, grabbing those reports. But this site is really cool because you can then go, and this is two of my other favorites because, like I said, what wags the tail? At the end of the day, this is what's really important. And we just talked about the yield curve. Well, here we are. We have the US dollar index, which is at 105 right now. So, the relative strength of the dollar, and then let's see, we'll go to all and see where this has gone eventually. So, we haven't seen these highs since, 20 years. Exactly 20 years. So this is why the dollar is strangling the rest of the world. So the higher the dollar goes, the more strength it has compared to the rest of the world. You can kind of think of it in a way, and I forgot who explained it like this, unfortunately, but they talk about a variable rate mortgage. As the dollar goes up, that means the rest of the world now has to pay their debts off in those hardening dollars, in those dollars that are gaining in strength compared to their currencies. So it'd be like a variable rate home, and all of a sudden you're paying 5%, and then you're paying 6%, and then you're paying 7, 8, 9, 10%. That's why you're seeing these countries implode, Sri Lanka implode, UK, pound, all these countries are having trouble because the dollar is strengthening. Japan saying, oh, whoa, stop. So this is truly the tail that wags the dog. And we just mentioned the yield curve and what's going on there, and that's the other part of it. So the U.S. 10-year Treasury is at 3.7. And we talked about the yield curve, and we're going to show more of that going forward because these two things, the U.S. 10-year Treasury, which really is, they say, the benchmark kind of for all debt in the world, and the federal funds rate is at the bottom, and that's what the Fed is trying to manipulate and basically have that move, so that way it moves the rest of the curve. And then they have to get in and do other things, yield curve control and buying bonds and doing different things, which not to get into that right now. This is just kind of an overview of what we're going to do try to do it every day that we're able to, and be a daily report of where are things at and what does it mean for going forward, because this is the dog that wags the tail. So if we know where the 10-year Treasury is, this was 300 basis points lower 2 years ago. So we've had massive increase in this, and it just continually climbing and stair-stepping up at really the fastest rate it's been in, I believe, forever, at least, probably 40, 50, 60, 70 years. So this is the tail that wags the dog. Everyone looks at the stock market thinking, oh, this is what's going on here. They're looking at the Dow Jones ticker and the S&P 500, the NASDAQ. That is the bottom. That's what trickles down at the end. So everyone looks here and looks at their 401k portfolio, but that's not how this works. Where things start is a credit market freezing up. This is what happened in 2007, 2008. This is what happened in spring or fall of 2019 that led to the printing in 2020. So when the credit market sees up and gas stops coming out of the pump, and your debit card locks up, or your credit card locks up, that's where we have problems at the end of the day. And it all starts in the treasury market, in the credit debt market. So we want to keep an eye on this. This is the thing that no one teaches in school. And the macro people watch us all the time. This is what macro people do. They're looking at, hey, where's the 10-year treasury? Because again, the rest of the world, everything is predicated off this: mortgage rates, you name it. And then we're looking at the dollar index. So these two they work in conjunction together, but this shows us, hey, where's the world going? So we know if this is strengthening, if the yield keep going up, that 10-year here keeps going up, and generally that will mean that this is going to keep strengthening, and it's going to start crushing everything else around the world. So at some point, the Fed will have to give up. And this is why many people, Dr. Jeff Ross, Greg Foss, Larry Lepard, all kinds of people, all kinds of macro people, the Robert Kiyosaki's of the world, they predict, Ken McElroy, the next year is going to be a lot of turmoil, because we have this conundrum where we still have high inflation. There's going to be high inflation going forward. And we still have rates that are high, and that's not going to bring down inflation, and they know that. So it's a game that's being played. They're trying to crush demand. They're trying to crush everyone. So we have to be very careful. What are we going to do? That's why a lot of these guys are on the sidelines. They have a good cash, a lot of powder dry. They still have assets, right? It's not like they've sold everything, but they have a lot of cash on the sideline to pounce on deals over the next year. Because many people that we are seeing and studying, showing, hey, there's going to be a lot of chaos in the next 6 to 12 months. Be prepared. There's going to be deals available, whether it's in real estate, stocks, probably Bitcoin, and they're going to be there to have. And that's when the smart money makes their money, right? That's why Warren Buffett has, 130 billion. I think the most he's ever had on his balance sheet, and the most cash he's ever had sitting, more than '08, because he's ready. He is ready to pounce. So this is what I want to show every day. We'll just keep an update on this for 5 minutes every day, see what's going on here. And again, if you want to follow this closer, the trading economics is awesome because it has a calendar here. You can see, economic indicators, the earnings, public holiday. That's great. So you can see all these calendars as to what's going on. But then you can go in here. You can go into the markets, check the currency, right? So you can do this all in one spot right here. Or you could go to, the dollar index and market watch and check these. And get your news too, I guess, right? That's another way if it's all in one spot there. But I do like trading economics because you have all these charts and all these graphs available for you right at the like markets. This is, you really want to know what's going on. Again, you just follow the currency, see what the dollar's doing right here. Great. DXY, got it. And we have the government bonds, the 10-year. So, right? So we have the two big indicators, and then that leads and trickles down to the stock market. So now we have the stock market. We can look at what's going on with the stocks. So it kind of is in order here perfectly for us to see what is happening, and that's where. And then you can look at GDP. This is a phenomenal site because everything you need basically is right here. You can kind of just go right down the list here and look at a couple things quickly each day and say, okay, here on the calendar, what's coming out today. They give you a little bit of news, obviously, and then show you, boom, hit currency, hit the 10-year, look at GDP. You can know what's going to be happening going forward. Like if we just see the yields keep going up and bonds are selling off because they're inverted, and we see the DXY, the dollar relative strength, keep going up, we know that there's going to be problems. More and more that goes up, the more problems we're going to have around the world, the more unrest we're going to have. And that's why we keep saying prepare, get independent, get resilient, because we have been in a bond bull market last 4 years, and that is now really shifting and going the other way. So we might see it, kind of just keep going sideways for a little bit, but eventually it's going to keep going back up, especially as Bitcoin takes over and starts taking premium away from all these assets. If people realize Bitcoin is the apex predator, it's going to take money. It's directly has its sights set on gold and silver right now, and then bonds next, the debt market. And as people realize I can be in this trade that's outside of everything, it will start taking premium from those assets and start taking premium from bonds. What happens when you take premium from bonds? Bonds keep selling off. They go down in price and up in yield. Meaning it balances it out though, because the average person, if they did save in currency, their local currency, it would give them a better yield. So savers will end up winning, hopefully long term. So anyway, excuse me, not to go down this too much. This is just wanted to be a 5-minute update as to what's going on, setting the context for what this is and things we're going to look at each day. Like I said, checking the news, kind of checking what's going on around the world, and seeing what should we be knowing and how should we be making decisions going forward. And we talk about this in our market portfolio update once a month, which is actually going to be coming out this week as well. And we're very diversified in all the different asset classes, the 5 or 6 different asset classes, and we have very little on paper. and we're getting a lot of cash on the sidelines, because I do believe that we're going to have some serious problems next year. And the Fed, that's the last thing I'll say, is they have to pivot at some point in the next 6, 12, maybe 18 months at the longest, because there's going to be a lot of problems around the world, a lot of people screaming and crying. And you're going to have this problem where the Fed can't service their debt. The government can't service their debt at 5%, 4, 5, 6%. They can't service $31 trillion in debt. You get to 10 or 20% of an interest rate, that would be your entire federal budget would just be interest, $6 trillion a year. So you can see we can't do what we did 40 years ago. We can't do what Volcker did and raised to 20% and tried to tame inflation. And Greg Manarino believes if you wanted to truly tame inflation, you would just raise the reserve requirements in the banks and suck money back into the system. But they're not doing that, and they know that. So what is the outcome? Again, he believes they want to crush the poor and the middle class and create really two classes of just the poor and the people at the top, the 1%. And I don't disagree with him. If you read Karl Marx, if you read the globalist, the collectivist plan, that is the plan at the end of the day. So we have to be, the more people we can get independent, resilient, the more that plan falls apart, the more freedom we can all have, the more wealth we can all have, which is really just our time and energy, and that won't be sucked away from us. And that's why I love Bitcoin. It's a finite asset for your finite time. It's the best trade there that we've ever discovered. So I appreciate you guys. If you like the market update, what we're going to be talking about and just looking at here, hopefully every day, it'll at least be 4 or 5 days a week, most likely, and trying to see where we are, what's going on, just a quick update every morning, right when we get in, and off to the races. That way we can figure out where we need to be, where we need to position ourselves, and what to be ready for at the end of the day, because that's what this is all about. And most people are just caught by surprise. I was caught by surprise, 10, 15 years ago. I was just in the political world thinking, and then you understand the money side, and the whole world comes together for you. So I appreciate you. Please like and subscribe if you like this. Please share it out, and I appreciate your time and energy, because it's the most important asset we have. I look forward to seeing you on the next one.